Hello and welcome to FXcast. This is our FXcast market analysis for Tuesday, May 10th, 2011. In each of our videos, we look for high probability trading setups, we look at the gold chart, we come up with a low volatility watch list, and inside of our watch list, we'll review the economic calendar to see what could affect our potential trades, and we have an education spotlight at the end. With that, let's begin by looking at gold. Okay, starting off with gold, we can see we talked about this bounce off the 50, whether or not it was going to hold. Once we broke half of our candle coming in, we had an entry, it had a continuation, and now it looks like we're pausing. What's good about the pause is as we come over to the market profile on the hourly chart, we can see where we are right now is above the volume potential support of 1507, and that matches up with the 20 moving average. So we should find some support in here if we break this price level. More importantly, if we break 1501, that's where we could begin to fall back down. But this 1507 to 1503 should be support for gold. Now, what we've been doing is comparing that with some of the currency pairs. So we'll bring up, here's the Aussie dollar, looking very strong, making the same bounce that gold has made. Here's the euro dollar, not looking as strong, and we're going to talk about this, but now we're also looking at, is this 50 moving average going to hold up? Now, one thing to also watch here on the euro dollar is, and we've talked about this, is this price level right in here. We'll go here. And as long as we stay above that, I think we're above the uptrend is still intact. If we break this 1.425 price level, I think this uptrend may show some weakness, but we'll talk a little bit more about that. And then we have, what am I saying? The pound dollar. And we can see with the pound dollar also not as strong as the Aussie dollar, but at least it has bounced somewhat. And so here we can see this swing high that we had to honor, which is basically where we're at, also below the 20. So this one still could go either way. I wouldn't trade it, but let's go ahead and break this down. And what we see right now that's good is that the pound dollar is above this volume support, this volume congestion area where we should have consolidated. And you can kind of see, if we start from the bottom, we spent 1, 2, 3, 4, 5 hours just kind of getting through all of this, and now we're starting to get above it, and we should start to see, if we stay above it, we should start to see that move up to test that 20 moving average. With the Aussie, we were seeing the same thing where we broke right on up above the volume support, but look what we did. We've come right back into it. So the question is, will we hold here? Will this volume support hold up? Or will we break through? Now you can see if we get through about 1.047, if we get through that, then we come back into like volume area and we should be able to move right back down. But right now we are entering the congestion area, and we may spend some time here before we make it out. Now if we bounce, we should be fine. We should be able to go higher. Then finally we'll go back to the euro dollar. And here we can see that weakness, and we can see on the hourly that we came back up, went down very fast, came back very fast. See, light volume down fast, light volume up fast. But we're pausing where there is a little bit more volume, so, and we're below it. So this is one that we're going to have to start watching to see if it's going to hold up above the 50 moving average, hold up above 1.425. Notice this wick came right down that area. So we have to watch what's going on with gold and see how our currency pairs with the dollars match up. Let's go talk about a couple trading setups. Here's the first trade we're looking at. It's the euro pound. We're in a sideways time daily chart. We're looking at a head and shoulders pattern. We can see there's left shoulder, head, right on over. So we're watching that head and shoulders pattern, which would be a break to the downside. So a break below 87.45. This is a common pattern that many traders watch, so there might be some strength behind it. And there's our targets. Let's put the charts and take a look. With the Euro Pound, our trade setup is basically setting up right now. We are looking, as we said, below 87.45, and it's coming into play right now. As we come over to the volume profile, you can see as long as we stay below 87.55, that's where our last volume resistance to this trade will be at. 87.55 should be resistance. And you can see we should be able to kind of flow right on down. So once we get below 87.45, that should be our trade. Our second trade is the Euro Yen. Here we have an M pattern, up, down. Not a strong pattern. You could see how it really 116.90 was one part of it. But we also have a couple of wicks that we'll look at when the chart comes up. We'll also see support here, so we'll be watching that. So basically looking at a break below 115, and our targets are listed as shown. Here we have the Euro Yen, and basically we're watching these wicks here on the daily. Let's bring those up, and you can kind of see where they're at. So when we break these wicks at about 115, that's where we want to go short, holding up hopefully 114 as our first target, and then all the way down to the 200 for our second target. And again, we can try to see if that volume support, our point of control, will that hold up as resistance, allowing this trade to set up. So again, we're watching for this a break below the 2 wicks. Our third trade on the daily chart is in a downtrend. It is the dollar franc. Basically, we're looking at a failure at the 20 moving average in that downtrend. And so we have a couple of wicks here. If we break below the wicks, which is at 8,700, we have our entry looking at halfway through the candle. And then we see where the buyers come in. We'll look at that with the charts as far as when to get our second target. What we're looking at here on the dollar franc was this move up to the 20 moving average. It failed at the 20 moving average, and now we're watching what's going to happen. We could have a rising 3 pattern where it moves up. It's not really setting up for that. So we want to watch the wick from Monday's session and see if we can break below that. So that's why we're saying 8,700 is our trade to the downside to retest the lows. First target is 86.50. Second target is going to be 8,600. You might even, you can see the buyers are coming in here, and so you want to be out before these buyers come back in to try to test the resolve of the traders. As far as the market profile, let me pull it out. I'm not sure why that's not there, but let's go ahead and do that. There we go. With our market profile, you can see if we do get above, one thing you can see this one that shows you really nice is that if we get above the wick here, if we get above 87.25, we should be able to move right on up, to about 87.50, 25 pips or so, because there's that light volume until we get up here to 87.50, 87.60ish. But right now, we are trading a break below 8,700 as a continuation, as a failure off the 20 moving average to go either make a new low or at least test the lows. Right now, we don't have any stocks coming up in our low volatility watch list, but we will update you throughout the day. On our inside bar watch list, we have the franc yen, we've got the dollar Canadian, the dollar franc, and the dollar yen. Let's look at the economic calendar. Okay, so on our economic calendar, we have a couple of things. You can see we have the Swiss consumer climate and the CPI. For the Swiss, we also have the China CPI. That all has to do with inflation data. For China, however, we do have trade balance. For the Aussie, we have the annual budget release. And for the New Zealand, we have the RBNZ financial statement. So we have a couple, but once again, just like yesterday, we are light on economic news. In our education spotlight, we're talking about the ingredients that go into a trading plan. Again, they say trade to plan, to plan to trade, or plan to trade, trade to plan. And that's one of the, again, things we talk about consistent high probability traders and losing traders is not having a trading plan or not having a complete trading plan. So what are some ingredients? Well, you got to figure out what is going to be your strategy, what is going to be a system, what are going to be your setups. A lot of people can confuse your setup for your whole system. That's just a part of it. But what is going to be the criteria that you follow to enter a trade? That includes the time frame you're going to trade. You trade off the daily, off the 4 hour, the hourly. How much are your commissions? Or are you doing one of these spreads? And therefore, even though there's a spread, that is still part of your cost. And then charting or whatever subscriptions that you might have. Your money management. What are you going to do once you're in the trade? How do you protect your profits? Cut your losses and let your winners run. Your risk. Where do you place your stops? Some people don't even look at the risk. They just look at the reward and forget that, there is a risk. How much is it going to go against you potentially? And remember, when you have an effective trading plan, a loss is just the cost of doing business. Because we're not going to be right every time. Of course, external factors. Again, it's great to have indicators and trading systems, but it really is important for you to have a back-tested system that you can have a positive expectancy, which is why you expect to succeed. Thanks, guys, and I'll see you next time.